Hey, what's going on? This is Big Ben, and today in this video we are going to look at levels on the chart. So I'm going to explain to you what levels I look at on the chart, and I'm going to show you why these levels are important. Now, the first level we're going to look at is swing highs, right? Now, in this video course, we have two sections. One section is talking about shorting, and then the last section is talking about going long. What we're going to do is basically going to go over the swing highs and the swing lows. So if you look at the market, right, the market's going down, up, down, up, down, up, down, up, down, up, down, up, down. Every time the market's going down and it goes up and it goes down again, reverse, it creates these swing highs, right? So the market went up and then it started to reverse. So this is the last high of this swing. So every time the market goes up and reverse back down, it creates these swing highs, right? So this is the high of that swing. So these swing highs is actually very important levels, because sometimes when the market goes to these levels, it will form some type of resistance. And if you don't know what resistance and support is, it's basically when the market goes to a level and it can't really pass that level, right? That's resistance. So if the market's going up and it goes to this level and it hardly passes this level, or just pass it and it reverse, that's resistance. It's like a wall, right? It's like you're trying to break out, but you can't break out, so it reverse. And the same thing is the reverse when it goes to going long. If you're trying to go long, if you try to go long, right, the market goes up, pulls back, finds support, and then it goes back up. So that's support and resistance. So in this video, we're going to talk about these swing highs and how the market reacts to these swing highs and swing lows. Okay, so right now the market, Bitcoin is going down, right? So when the market is going down, all you want to look at is the swing highs. So let's give you a good example. The market was going up, and I'm sorry, the market was going down, and then it started to reverse, right? And then when the market start to go up and reverse, you want to look at the first swing high, which is right here, right? And you want to look at the swing high. So I usually look at the first two swing highs for the most part, right? You could look at these swing highs too, because it is this is a very noticeable swing high. But for the most part, when the market reverse, I'm only looking at the first two, and maybe the third one, but the first two to me is very important. So if you notice that the market went past this swing high, right? We blew past it, but this swing high, we found resistance. So it went past it a little bit, and then it started to reverse, and now we're going down. So you have to keep in mind that these swing highs and swing lows will form resistance and support. A lot of times price do reverse at these swing highs and swing lows. So you have to keep that in mind when you're looking at the chart. Same thing with here. When it went up, when it went down, went back up, went down, and then we passed the swing high, but it only passes a little bit, and we start to go back down. So you just have to be aware of these things. Okay, so like I said before, it's the same thing when the market is going up. Okay, right? So the market is going up, right? If you notice, we had this swing low right here. So the market was going up, pulled back, went up. So the market went right back to this swing low. If you notice, it passed it a little bit, right here, somewhere around here, and found support, and then it shot back up, right? So let's keep going. See the market go up, the market's going up. Okay, so This is another area on the chart that if I was looking at this chart, I would be looking at this area right here, right? These two areas right here I would be looking at. So the market's going up, pulled back. It tried to go up again, but it didn't make another high. And it pulled back to this support, right? And then it blew past this support, and then it pulled back to this one right here. And guess what? We found support right here. As soon as it clipped this low, we reverse, and then guess what? We continue to go back up. So you have to be aware of these swing highs and swing lows because they do form support. Now this one, we went up, we came back down, we passed it a little bit, and then we shot right back up. So if you have draw a little trend line right here, if you see a big red bar and then the next bar a big green bar like this, man, whew, I'm telling you right now, there's a lot of buyers at this level right here. So this is a very high probability trade because a lot of buyers, as soon as it broke this swing low, right, you see buyers step right in, and then next thing you know, we start to go back up. So keep in mind that these swing highs and swing lows, they are very good levels to look at when you're looking at the chart. So now let's talk about another level that I like to look at, and it's basically a consolidation level. So if you have been watching my videos, I had a level on my chart, right? I had this level on my chart. It was a zone, right? So basically, I had this zone on my chart with Bitcoin, and price was going down. So I said, okay, I want to see how the market will react when it hits this level. So at the time, I think the price was maybe around here somewhere, and the price was going down, and as soon as it hit the zone, it shot back up. So let me show you how I got that zone. So let's drop back down to the 4-hour, right? And this area right here is pretty much the zone. So if you go back, this is right here around October, right? If you go back, drop down to the 4-hour, this is what you see. Now, I only use these if I see price run up a lot and it's not really clear where the market could actually bounce and continue to go back up. So when Bitcoin was going down, I was looking to see a clear area on the chart, and I really didn't see a clear area until I got right here. And I saw a consolidation, and then I saw a lot of buying right here. So I took this consolidation, right, and I took the top of it pretty much and took the bottom of it and made a zone. So let me show you right here. So you took the top and take the bottom. You can take the top. Boy, let me see. Take the top of this zone, right? And you can take the bottom of the zone right here. You can take the top of this right here, right? Now, the reason why I basically was looking at the zone is because price consolidated at the zone, and if you know anything about consolidation, a lot of times when it breaks out of the consolidation, price likes to go back to that zone. So if you notice, right, we have a decent 1, 2, 3, right? So you can have 3 connections right here, right? And basically the market pretty much had a nice little flag pattern, right? Nice little channel right here. And like I said before, the next section you will see how to draw these, right? So you have 1, 2, 3, right? So it broke out this area, right? And then it came, guess what? It came right back to the breakout. And then it shot back up. So within when we had this and then it started consolidated, then it created this big consolidation area, right? and then the market broke out of this consolidation. And notice that it came right back to the consolidation, and then it shot right back up. So while I'm looking at Bitcoin, I'm like, man, I don't know, this thing is just going down. I mean, I'm trying to figure out a good area to look at, and was a good area because it was a nice little breakout, and then it pulled back to this breakout. And then if you notice that when it pulled back to this breakout, buyers stepped in like crazy and start buying this market up. So I said, okay, I'm going to look at this level, and if price goes to this level, I want to see how it reacts to this level. And that's how I got this level on my chart. So this usually only works if price is going down deep, right? And basically you don't know where the price will most likely reverse. And if you see a consolidation area on the chart, most likely that area will hold. So let me give you another example with Tron TRX. Now with Tron TRX, we had this crazy up move, right? And then we was pulling back. So I said to myself, what's the next level? You know, what is this next level? And I saw this consolidation. So I went to the 4-hour chart. So let's go to the 4-hour. Okay, so we are at the 4-hour with Tron TRX. And if you notice that this area, let me see if I can go back to the daily chart. Okay, so this area right here, this area right here is this right here. It's this. So if you notice, let me zoom in a little bit. If you notice, guess what? This is a area where Tron TRX consolidated, right? And you can draw this area multiple ways, but because it was a triangle, but you can just basically box it in, right? Have a horizontal line right here and a horizontal line in the bottom of this, right? And guess what? As soon as Tron went to this area right here, which is right here, Tron shot up and went crazy. So these areas are very, very key areas on the chart too. But they usually work if it's going down and you don't really have a clear area where price is likely to reverse. And especially if it makes a crazy big move like this, if it goes back down, you're like, okay, where's the next area price could likely reverse? And you look at areas on the chart where price pretty much consolidated and broke out this consolidation. Because like I said before, price loves to go right back to consolidation. So those are the two main areas we are going to talk about in this section of this course. And if you look at the swing high, remember we were talking about the swing highs. Tron was forming resistance at this swing high. So if you notice, if you notice right here, this is a swing high, right? And this is another swing high. So when price got to, it blew past both of these swing highs. So boom, boom, right? But when it got to here, it formed resistance. This is why I had this line right here on Tron TRX chart. Every time it hit this resistance line, boom, guess what? It reversed. Hit it again, boom, it reversed. So that's why I said before, these swing highs and the consolidation areas on the chart are very good areas you can look at. And most likely price will reverse at those areas. And if you notice that the price was going down, popped up and made a swing high right here and then continue to go back down. Guess what? When Tron went to that swing high, we went up just a little bit, and then guess what? We formed resistance. Sell like crazy. And guess what? It went up to the swing high. Sellers came in just a little bit, came back. Sellers came in one more time. And then we tried to go up, right? The sellers came right back in, and then next thing you know, we have this big red bar right here. So you understand that once you look at these charts, once you look at these swing highs, swing lows, most likely these areas will provide support and resistance. So make sure that you understand them and notice these swing highs and swing lows and be aware of them now. Once you are aware of them, then you can actually take advantage of it. So this is the end of this video, and I will see you in the next video.